Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk with a warning. There's actually never been any four-letter words in this broadcast, and hopefully there never will be. Starting off with Advanced Energy, and here you can see that you don't actually need that much historical data to come up with a charting target. In fact, almost none at all in this case. You can see that managed to draw a rising trend channel from the end of February heading towards 0.5 pence, and that target value while we hold above the floor of the channel and I suppose the 50 and 20-day moving averages at 0.15 pence. Ideally, there's no end of day close back below that late February resistance at just shy of 0.2 pence. Bit of chit chat on Twitter at the moment regarding Barron Oil. Had a look at it, and it looks as though we have a potential technical buy situation broken above the 200-day moving average at 0.08. We've had several false alarms in terms of breaking above and holding 0.1 pence, which is the key here. So end of day close really above 0.1 pence is what we're looking for. If we can get that, then possibly up to the top of that rising February trend channel that I've drawn, heading towards 0.16. But the real magic here would be to guess that this is finally the spike that we're going to see to echo the one we saw at the beginning of February, which obviously was a multi-bagger affair. As far as stop loss is concerned, really the 50-day moving average at 0.07 should not be broken. I think that's probably more crucial than actually holding 0.1 pence at the moment. Clear Leisure is next, and just to show that we are in almost certainly in a bull market of sorts for small caps. We've seen a spike for the shares towards 0.4 pence. It hasn't lasted, but at least while we're above the 200-day moving average at 0.21 pence, one could say that this stock could be in recovery mode after today's gap to the upside, and we could also be in the run-up to a golden cross buy signal between the 50 and 200-day moving averages. But at least while we're above 0.21, the 200-day line, this is not a false dawn. Ideally, we get an end-of-day close today back above that resistance line from June last year at 0.3 pence. And such a close any day this week would cement the idea of a possible lasting recovery. Next up, a stock which I saw move yesterday, rather late I have to say, but we have CQS Natural Resources. I've never charted this before, so it was just a good excuse today to look at it. I've got an uptrend line there from March, level with the 20-day moving average at 74 pence, and while we hold above that, best case scenario target here for the shares at an October resistance line projection up to 107 pence. Ideally, there's no end of day close back below the 200-day moving average, currently at 78 pence. Empire Metals has been on the front foot over recent days after its announcement. I think it was last week. Seeing a clear breakout here through what was troublesome resistance around the 2.2 pence level. I think I was always looking for 3.5 pence, possibly 4 pence as the target, and hopefully 3.5 pence at the top of that rising trend channel from February could be the destination over the, I suppose the course of the next 2 to 4 weeks, possibly even sooner. If you're a fan of the stock and you're looking for a big target to shoot for, perhaps we could be in a trajectory like that, which would be a steeper trend channel. I suppose that's a late March trend channel. So above 3.5 pence, best case scenario target up to 5 pence. Stop loss on the whole thing back below the 20-day line at 1.7 pence at the moment. On to Gunsynd, which has been a shell extraordinaire over the recent past. Here we see the stock having crawled along a rising, an uptrend line there from March. That support line basically at the 0.6 pence area, so above 0.6, this stock nominally in recovery mode, and we could see the top of a rising January trend channel at 1.7 pence as the best case scenario target for the shares. If you're cautious on the stock, maybe wait for June intraday resistance at 0.82 pence to be broken on an end of day close basis before pressing the buy button. But the recovery scenario there only valid there technically while we hold above 0.6. Jubilee Metals is next, and seen a good recovery here with sort of V-shaped recovery here for the stock since the end of March and the COVID lows. Broke back above the 200-day line at the beginning of this month at 3.5 pence, and really while we're above 3.5 pence, feeling bullish on the situation. Looking towards the resistance line there from April last year, heading towards 6 pence as the target, with the added fire that we've gapped up since the gap up here since last week has been held through 3.7 pence. So at least while we're above that particular number, the upside here looks pretty well entrenched and ingrained. Moving along to the next contender here, Prairie Mining, just breaking through the 200-day moving average at 10. Well, I suppose it's just under 11 pence there. The positives here: the break of the initial June resistance at 10 pence, and the gap higher above the 50-day line at 7.23 pence for last week. The view here is that at least while we're above 10 pence, looking for a retest of the old September peak there at 18 pence. Best case scenario target at the moment, probably a bit better than that, heading towards 24 pence, which would be the top of a broadening June triangle from this time last year. So above 10 pence, looking pretty strong there for Prairie Mining. Richmond Resources is up on the podium now, breaking that near-term triangle. Basically did that yesterday at 0.26 pence, let's say. At least while we're above that February uptrend line at 0.25 pence, we've got a best case scenario target here at the top of a rising December trend channel, looking at 0.65 pence. So pretty sprightly there for the chance of a second wave to the upside there for Richmond Resources. Stock which I've been meaning to look at for many months is up next. Comes in the form of Pembridge Resources, breaking the near-term triangle or near-term wedge there for the stock, and also back above the 50-day moving average at 3.06 pence for the first time in a long time. So on that basis, while we're above the 50-day line, looking for a top of March trend line target as high as 7 pence over the next month or so. So after that, all that congestion looking pretty encouraging there at Pembridge. Stock which could have looked at yesterday but left it until today is Palatro. Here we've got probably the most encouraging part here really is the that gap there, gap higher from the lows, which remains unfilled. We did have a gap down, but managed to recover from that, and a couple of gaps in the middle of this month. So pretty strong on the price action front, albeit on a relatively illiquid stock. But it does mean that we can project the shares pretty high up to the top of that rising trend channel from December at £1.10, and that target very much valid while we hold above the 50-day moving average currently the 200-day moving average currently at 51 pence. I didn't want to look at UCOG at all yesterday, but I did, and it looks as though, even though I was doing it kicking and screaming, the shares have actually delivered for a change. Yesterday, the highlight was really breaking above the 20-day moving average at 0.22 pence, but today we've cleared the 50-day line very easily at let's say 0.25 pence for the first time in a long time, many months. That does suggest that there could be a lasting turnaround here. While we're above the 50-day line, looking for a best case scenario target here as high as 0.5 pence over the next month to 6 weeks. And as I keep on saying, cash raising, placings, etc. Permitting, because clearly this company has been doing that all the way down for the shares. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.